All right. Hey everyone, Mark here. Thanks for joining me for another Greenbridge Investing market analysis. This is a live stream. So if you're new here, this is how this works. If you have a symbol, like a stock or a market that you'd like to see analyzed, please share it in the chat now. So once I complete my analysis, I can go through the symbols that you'd like to see. Okay, so I do go through the chat. Just be patient and I'll get to the symbol that you'd like to see. So thank you again all for joining me. So in this session, hey Photo, in this session, I want to focus a little bit on the NASDAQ and on the S&P because of where they are right now and what that means for a lot of stocks. And I want to talk about that new Bitcoin swing trade idea, the alternate one that I sent out yesterday. Okay, and also we can look at a couple of altcoins which I saw some similar activity. Hey, Joe. Okay, so let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Hey, Bella. Thank you all again for joining me. Okay, so by the way, anyone that's new, if you're new to Greenbridge, please make sure you subscribe to the channel here. Also, you like the video if you like the work that I'm doing. And if you can, please share with your social network or your friends because it's a really big help and it's much appreciated, especially since that's all the work. I have to do all that work, okay? So, and also we have swing trade signals by text and by email. Just go to greenbridgeinvesting.com. I highly suggest that or encourage you to try out our 7-day free trial because we are raising our prices and we're not going to raise our prices on current members, okay? Only new members. So if you're new and you wait and then we raise our prices, you have to pay the higher price. All right, now, enough promotion. Let's get into the stocks. Now, first thing, before I get to the S&P, today's Monday. So I want to take a look at the economic calendar real quick. And let's see what we have going on here. Now, Fed Chairman Powell spoke earlier today. Okay, so that's something I was not aware of until I took a look at this calendar. It's very important that you keep track of when that guy speaks because things can change really fast or not. Now, today we're closing on looks like we're going to close on the lows. So that may be a result of something he said. I don't know. I don't really care. I just want to know when he's speaking, and then I want to see how the market behaves afterwards. Okay, so we'll talk about that once I get to that S&P chart. Now, at 8:40 a.m. we had, the ECB president spoke. That's all out of the way. Okay, again, now the euro, there is a long signal in the euro. I wasn't able to call that, but we'll talk about that here too for those that are interested in Forex. We'll talk about that. But I told everyone on Friday, I'm interested in the long on that. Okay, so, and I'm still interested in that long. Australia, RBA meeting minutes, no big deal. Okay, the Chinese interest rate decision, that's at 9:30 p.m. Eastern time tonight. I'm not going to worry too much about that, okay? That could have an effect somewhat, but I'm not going to worry too much about that. Now, going into the next few days, Australia retail sales, again, not a big deal. Consumer price index for the pound, not a big deal. Okay, on the 21st, which is Wednesday, at 3:30 a.m., the ECB president speaks. That can have effect on Forex, particularly the euro or the DAX. Okay, so something to keep an eye on. I know there's been a lot of drama with that Brexit stuff, and I think that's why we're seeing an effect. We're seeing that long in the pound and in the euro. Okay, 8:30 a.m. the Bank of Canada Consumer Price Index. I wouldn't worry about these. No one cares. Okay, Bank of England on the 22nd, which is what is that? Thursday? Governor Bailey speech. So again, important if you're in the pound. If you're not in the pound, I wouldn't worry too much about it. This is not a global market mover. Although the Brexit thing can have an effect, but it's not going to have a major effect on the dollar. Okay, it'll affect the pound and things that are particular to the pound. New Zealand Consumer Price Index, not worried about it, no big deal. Okay, now presidential debate. Okay, now on the calendar on the week before, it said the same thing, okay? Presidential debate. This calendar, they don't update it, Okay. And so I'm sitting here and I'm telling everyone, oh, yeah, there's a debate on Thursday. Meanwhile, there's no debate. So make sure that you double check on some of these things. Otherwise, you're going to think that I'm sharing fake news or something, and DJ is not here to correct me. So just it's important to just keep an eye on the schedule. So why am I pointing out the presidential debate again? Because I talked about it the week before, and like I said, they changed it. So this calendar isn't the most reliable because they don't update the calendar. The presidential debate, if there's any surprises that are said, that can have an effect on the market. It can have an effect on the S&P. It can have an effect on the dollar. Now, typically these things, I mean, if you saw the first one, there was really nothing important said. There was just a lot of nonsense. And that's not really going to have an effect on the market. Just have to watch out for the economic stuff, okay? So we'll see how that goes if it occurs. Now, if it doesn't, again, make sure that you double check on this schedule. Now, Friday, the 23rd, German manufacturing. I wouldn't worry about this really unless you are into the DAX. And none of these numbers are really that important, okay? I don't see any more Fed Chairman Powell speeches. I don't see any NFP, and I don't see any FOMC meetings. So in that regard, there's not really a whole lot going on economic calendar-wise, okay? So let's get rid of that. I spent enough time on that. All right. So again, everyone, if you have a question about a stock or a market, please share it in the channel now. And once I get through this stuff, I'm going to talk about the S&P, the NASDAQ, perhaps a stock or two, and then we're going to talk about Bitcoin and perhaps an altcoin. And then I'll take a quick look at that euro because I'm very interested in that. And then I'll get to your stuff, okay? So again, thank you for sharing it. So let's begin with the S&P. Now, earlier today, when the market opened, okay, the market started out kind of on a strong note, right? Now let's take a look at this. Let's really look at this candle here. So today's high on this candle is 35.04. Now this is the CFD of the S&P 500. So the numbers aren't going to match the futures exactly, but it's the price action, it's the patterns that I'm interested in. Now today's high here is 35.04. The open was 34.70. So that means at the open, it tried, okay? It tried, and there was a green candle at one point, and that's why I was looking at a potential higher low, and then it sold off, okay? Now the low is 34.21, and we're just basically 10 points above that low, and it looks like it's going to close weak, right? We have 15 minutes before this thing closes, and it looks like it's going to close weak. But what's important about this situation? Should we be focusing on the fact that we have a weak candle after a pin bar? Hey, that's great for our Q position short. We have those Qs short. We also call the CFD short. Back up in here. That's great for those positions. And at this point, there's nothing to do but let those positions try to go for their targets. Okay? There's nothing to do. We got a nice bearish close. That's what you want to see. But if you're not in those bearish positions, then what we should be looking for, this is not a place to be putting on a bearish position. If you're not in from a good price, then you're taking a lot of risk here. We're in from a good price. Okay, we got in back up here, and you all saw that trade that we sent out. So now we just let this thing do its job. But here, the current prices, you're taking a lot of risk. For one, you have an inflection point in the area near 3,400. That 3,400 is going to be a support. Buyers are going to be looking to buy there most likely. Now, that doesn't mean you just step in front of this thing right now. It's possible that if some negative news comes out during the week or something, it can clear that level just out of nowhere. It can do it. So what we need to see is confirmation. If we get confirmation, then we will have a higher low at an inflection point. That is good for stocks. Okay? Here, so I'm going to draw a box. Just like on my Bitcoin chart, right? I show those boxes where I'm anticipating things are happening. Now notice I use the word anticipating, all right? If you go on TradingView and you go on these other forums, they're always reacting. All those fake gurus on there are reacting to stuff. I'm like the only one that's anticipating stuff. And I'm not just saying that just because I think I'm cool or anything. I'm saying that because, it's just funny how these top authors just promote reactive behavior, and they're just, throwing all their customers off, which is actually good for us because we need someone to take the other side of our trades. Anyway, my point is this. We want to see this thing go into this area, test the 3,400 area, and give us a bullish reversal. If we can get that confirmation here, that will be a higher low. Okay, and that's what I mean when I say stock market turning higher. Well, that's what I mean by that in this title, because that's where we want to see it turn higher, is there, not right now. Now, another thing you need to consider, because some people are going to be reacting, and they're going to be reacting short, you have to consider this relationship right here. You see today's low relative to this low a few days ago? What is that, 34.39? What is that low? Yeah, 34.39. That's not a whole lot lower. So this could possibly turn into a failed low. Now, right now at the moment, again, there's no confirmation, but that's how I know, without even doing anything else, I know that shorting this right now is a bad idea, because there's just so much risk here, and this thing can bounce in my face so easily, especially since the broader structure that people forget about this. And I've mentioned this before. People only focus on this, especially when they're looking at their 30-minute chart and all that other stuff, and they very easily forget about this. Okay, that whole structure off of that low. What is this low here? 32 and a quarter. That's the structure that's in play, and that's what we're correcting right now. So we're looking for the higher low, and we can see that maybe tomorrow, maybe Wednesday, and we want to be in position with certain stocks. We want to be prepared to maybe grab a swing trade or something, all right, on the long side. So that's the S&P. Now let's take a quick look at the NASDAQ. Again, if you have any questions about this, please let me know, especially if it's about stocks and how stocks are behaving along with this. So same with the NASDAQ. Look at this thing. So we're at 11,648 right now, just like the S&P. It's going to follow the S&P. Just like an altcoin follows Bitcoin, they're not going to really do much different than each other here. And we're pulling back into this inflection point. Now you notice, again, we got short those Qs because of this level. And what a nice move. Okay, great. So nothing to do with those positions. Let them ride until we get a buy signal or they go to their stop. They go to their targets. But the thing is, if we get a long signal in this area where we are right now, it's a good place to be buying stocks after the signal is in place. There's no signal right now. So the purpose of this stream is to have you mentally prepared for that reversal, because you're not going to find it on the news. CNBC is not going to go on there and tell you, oh, by the way, we have a higher low. No, they have no idea what's going on. They just report reactionary information because that's how they make money. Okay, no problem. But we need to be prepared. And we're at the level. That's the first point of interest, is the level. And then we need confirmation. Okay, so those are the major markets. Now, let's take a look at a couple of stocks that may be of interest. Now, Nikola is not a market stock, okay? But I'm going to point this out for a particular reason. No matter what, now you notice the market's weak today, and Nikola is not pushing lows. Not yet, anyway. And it looks like it's going to give us a little inside bar. So this is not a good example of a market stock, but it is a good example of a stock that's at an interesting level. You can get options on this thing cheap. You can get April options for like $200 per contract, or about $235 or something like that. I was looking at the options before. April, that's 6 months about, and you can buy all that time for about $235. And I'm talking, what strike price am I talking about? I'm talking about I think it's the $40 call. So it's $20 out of the money, which you're like, wow, that's ridiculous, right? It'll never get there. Well, but what do you think? How long do you think it'll take to get there when it goes? Do you think it'll take months to get there, or do you think it'll take days? The way this thing moves, if it's going to go there, it'll probably take days. So if you have 6 months worth of time in this thing for only $200 or $230, that's not a lot of risk. Okay, I mean, so if it doesn't work out, you'll have an opportunity to probably get out of that thing and lose maybe half of that premium. Okay, but because there's so much time in it, that premium is not going to vanish quickly. All right, so just something to keep in mind. I have not sent out an official trade on this, but I do want to point out that this isn't a great location where you can get some cheap, deep out of the money options with a lot of time. And this is a mover when it moves. Okay, it just hasn't moved yet. just like Jumia, right? We took a look at Jumia, and like I was talking about on Friday, this thing is just like vertical, all right? And you could have gotten similar situation, but even more time, like I pointed out, and you know, that's where you can get these nice options trades. So Nikola is one I just wanted to point out. Now let's talk about a stock that's more sensitive to the market. Okay, a stock like AMD. This is very popular. A lot of people in our chat room are interested in this stock. And AMD, as you can see, right, we have a red candle on the NASDAQ. We have a red candle on AMD, of course, because AMD is a market stock. It pretty much reflects the NASDAQ. Look at this candle here. So we're correcting that bullish movement. AMD is still a strong stock. Now, some people are going to argue and say head and shoulders. I even had this inflection point drawn here in advance, right? Because people were interested in buying it there. I said, why would you buy it here? This is not a place to be buying AMD. Now, we're getting into a much more attractive area. Okay, so if that stock market turns, AMD may be a good candidate. Now, here, so what prices should we consider? Somewhere around here, okay, which is, what is it, 78, the high 78s. If AMD could retrace into there following a market reversal, AMD will probably give you a reversal as well, which will be a higher low. And that's what you want to see, whether you're buying an option on this thing or you're buying the stock, okay? So just wanted to point that out. All right, so that's the market, and I just want to point out just a comparison of a couple of stocks. All right, no problem, Joe. All right, so let's take a look now. Let's jump over to Bitcoin real quick, because I sent out a trade idea to our members yesterday. It was an alternate idea. Now, what is an alternate idea? Remember, we're long Bitcoin from 2 weeks ago from 10,675, which I also shared that publicly, just not completely. And of course, with our members, I shared all the details. There's no reason for us to put on more of that position. So I shared an alternate trade yesterday on, basically it was based on this pin bar break, okay? And I was looking for a buy limit order. And based on whatever, I don't know what broker you use, but today's low on this one was 409. And I put the limit order basically at 415. So it's possible that you got filled on that limit order for the alternate trade. Now again, what is an alternate trade? An alternate trade is one that we do not officially take, and I made that very clear in the email that went out. It's for people that maybe missed the first one, and we're looking for another opportunity, and that was it, okay? So it was aggressive, like I pointed out, because this is a tough resistance area. Now look, we've pushed into it, 840. Now what's our, what is the, I don't remember the second target on this. This thing is very close to the second target. Actually, I think it's 875, right? Today's high is 840. The second target is 875. So it came within, what, a couple of like maybe 20, 30 points from our second target. And that's nice, right? We're a strong hand. We can hold on to this thing. It doesn't matter. This is a nice close if it can close like this. As you can see, I drew this line yesterday in advance, and the market wants to follow it. Okay, cool. So we got the higher low. It should go for the higher high. I'm expecting more follow through. So that was the point of that trade. Again, for people that may have missed our original trade, there's no reason to put on more risk for us. We have 2/3 of our position, and I'm not going to put on more risk right into a resistance zone. And also, this trade that I sent out had a very tight stop. So if this thing fooled around, it could easily have stopped out for like 300 points, which is very tight for Bitcoin. All right, so that's why I made sure to note that, you know, that tight stop increases the chances of getting stopped out. You have to be prepared for something like that. And this is not the type of trade really for a beginner. You know, because you have to be nimble and you have to recognize when things go wrong quickly, since there's such a chance that things can go wrong quickly when you're going long into a resistance. But hey, look, so far so good. Let this thing ride, okay? We'll see if we can get our second target maybe tonight, maybe tomorrow, and that's that. Now, any questions about Bitcoin, let me know. Another stock, another altcoin that caught my attention yesterday was Swipe, which is what, X, what is that? What's the symbol on Swipe? I can't remember. XSP, USD, right? Swipe. Now, it's not performing. It's not doing anything right now. but I like the consolidation, okay? And it's not following Bitcoin, which, if you're long this thing, that's not what you want to see. But it's not doing anything. This thing starts to go, it's going to get everyone's attention again. It needs to take out this high over here of $1.40. So, hey, Ricky. So that's Swipe. Another one of interest that I keep an eye on is Link, right? Link USD. This one tends to follow Bitcoin a little more. But now look at this. Nice formations, right? It's doing what it should be doing, but the moves are not as dramatic as they were. So you have to have a lot of patience. So if we have a higher low, it should go for the higher high. But obviously this thing is not rushing to $20 anytime soon. So you have to be patient with these things if you're in something like Link, although Bitcoin is going your way. You really have to get into the coins that are in play. I mean, how's Litecoin doing? Is that going anywhere? No, what a piece of garbage, right? That should be doing something, and it's not. So how's Monero doing? XMR, USD. This one is an outperformer. Okay, this is a tough one to take because of this location, but you could see what it's done previously. We had a nice trade in that. These simple higher lows are tough. Like if you miss something like this, you just let it go. If it pulls back and gives you a double bottom, then it may be worth getting involved in. Okay, so Monero is a good one to keep on your radar as far as altcoin swing trades if you're not into Bitcoin. Okay, and it's cheaper. It's a little cheaper, obviously, a lot cheaper than Bitcoin. All right, so that's the Bitcoin and altcoins. Let me take a quick look at the euro against the dollar, because I've been talking about this long, and I've been talking about it long, and I've been talking about it long. And then Michael puts in the chat really early today, hey, was the euro long at break of 1745? And yes, that was a nice place. I didn't send this out because at that time I should have sent it out the evening before, but I couldn't. So this is where it's good if you have the ability to use your discretion. That was a nice inside bar break, and that trade is now in play. So my answer to Michael at this point, if you're interested in the euro long, which I may send something like this out, this is where you can put a limit order below the market instead of chasing it, because right now it's at 1768. These forex pairs have been so noisy that most likely if you put an order at like 1755 or 1760, most likely you get filled, okay, over like the next day, especially with all these speeches going on with the ECB and everything else. I wouldn't be surprised to see this thing print a red bar followed by another green bar. So there's still plenty of opportunity to get into this thing. You don't have to chase it. So if you're interested in the euro, consider the limit order below the market. Again, I've been liking this long because we have a higher low. I talked about the higher low over here. I talked about the second higher low. I talked about this on Friday over here off the 1680 area. This thing is strong, all right, because the structure that's in play is this. Not all this consolidation nonsense that, a lot of people who are focusing on the 30-minute charts are focusing on. People telling me that the euro's a short. The euro's not a short. So, and also, you have to, I don't talk much about fundamentals, and I don't really use them, but something you do have to keep in mind when it comes to Forex and gold is you have to question, are the fundamentals in favor of this thing being strong, or are they not? And when I'm talking about fundamentals, I'm not talking about you have to be an economist and get every little detail, just a general idea. And as we know, it's in the best interest of the U.S. government to have a weak dollar, which means euro it's going to put bullish pressure on the euro. Same with the pound or anything else that trades against the dollar, right? Like the pound. Look at the pound. This one has all that Brexit drama going on in it, but still, same idea. I'd rather buy the euro than the pound because the euro is a little bit more stable. All right, anyway, so that's it. I just wanted to point those things out. I don't want to spend all day on these because no one really cares a whole lot about Forex. But anyway, so that's what we're looking at. I may send that euro trade out. But again, use your discretion. Paper trade it if you want or something and see how that plays out. You could put your buy order in at like 1750 or something like that. Put a stop at 1650. It's a 100 pip stop. I know that's wide, but that's what you need on these things sometimes. And then see where it goes from there on paper. Now, All right, so let's go to the chat here and see what kind of questions everyone has. By the way, if you're new to Greenbridge, please make sure to subscribe to the channel here. Also, if you like my video, please press the like button and share it with your friends and your network if you can. It's a big help. Also, check out our website at greenbridgeinvesting.com. We have a swing trade signal service by text, by email, portfolio management ideas by email, and a chat room where we update our trade ideas and provide insight each day. We have an active investor 7-day free trial. So if you're new, make sure you sign up for that because we're going to raise our prices soon. And it's only going to be for people that are not customers. Because our regular members, we're not going to increase the prices on our regular members. Okay, so let's get into what we have here. Hey, Photo Guy, hope everything is going well for you. Joe, nice to see you. Okay, Bella. So Bella, try to start a GE options trade and thinking about $5. Okay, premium is coming at 360. May I ask your opinion about this? Okay, so let's take a look at GE. We talked about this GE briefly on Friday. I believe Powell brought this one up. And as we know, fundamentally, GE is a clean energy play, right? It's one of those renewable energy because they're like the leader in the space. They just had other problems, I guess, why the stock's been so uneventful. GE attempted to tried to break out this, has this range breakout. That took place on Friday, which caught people's attention. Okay, so Bella, you're looking about an options trade. Now, January 23. Okay, so that's a really long-term option. Okay, nothing wrong with that. And you're looking at the $5 strike price for $3. Is that right? The $5 strike? That can't be right. It's got to be more than that. The premium is $3.60. So if you're talking about the $5 strike price for, if this is correct, January of 23. So you're looking at basically 2 years or 3 years out. Okay, well basically a little over 2 years out. The $5 strike is $3.60. That's cheap for that much time, okay? And that's an in the money, right? That's an in the money call. So that's like buying the stock outright without having to pay without having to spend the amount of money that you have to for the actual shares. It's cheaper, right? You're spending basically half. And it's like if you're deep in the money with that much time, it's like controlling the stock. The delta is going to be very high. So every dollar the stock moves, the option should gain $1. So that's not a bad idea as an investment. Just understand if GE wastes a lot of time, that 360 can obviously, melt a bit and you may, be banging that out at $2. But the thing is, with all that time, it's that premium is not going to vanish on you quickly. Okay, so that's a good idea. I don't think it's a bad idea. One thing you might want to wait for, Bella. Okay. Yeah, no problem, DJ. I'm definitely going to go. Actually, I went over Nikola earlier, but I'll go over it again. If you go earlier in the video, DJ, I went over Nikola because it's definitely a stock that I'm watching carefully. So Bella, in this situation here, right, you have a potential failed high situation, and with the market trying to pull back, and without the market not giving us a buy signal, GE may have some room to pull back a bit. So those options for $3.60, if GE pulls back into what is this here, 6.5, you may be able to get those options even cheaper. So in this situation, what you can do is maybe put a bid for $3 or a bid for maybe slightly lower. And if GE pulls back, they'll fill you. Okay. And with the market pulling back, I wouldn't be surprised to see this thing pull back a bit. It may take a couple of weeks because this thing's a slow mover, but it's worth a try. Okay, so that's what I'd say about that one. Why pay the full price when you could probably get it for a little bit less? Maybe you could buy 2 contracts instead of 1. All right, so that's what I have to say about that. I like the idea, especially if this thing, whenever they fix whatever their problems are, this thing starts to go, then that thing will be a nice trade because this thing can run to 10, maybe even $12, in a year, as long as the S&P and NASDAQ agree with that. All right, I don't think this thing's going to run on its own. So thanks for bringing that one up. Okay, Joe, Qualcomm. All right. So Qualcomm. So this is definitely a market stock, and it's had a nice run recently. I know they had some legal problems which they solved, and at this point you can't do anything with this. It's got a bearish outside bar. There's a pin bar from a few days ago, bearish pin bar, and this is going to follow the market. Okay. So with the NASDAQ week today, yeah, I'm not surprised to see this. So what you want to see on Qualcomm is a pullback, and you want to try to buy the pullback. So this would be one of those stocks that may be worth buying into the next pullback. If once the S&P and NASDAQ start to turn around. So the inflection points, right? We have one right there basically, which is around that 118.5 area. That can even translate to maybe 120. We're fooling around at 128 right now. So that might be a reasonable pullback to consider buying into. If that clears without any buy signal, then you're looking at like this area here, right around here somewhere, which is around 110. Okay, something like that. Hold on, I want to put that there. Okay, so you're looking at like the 110 area. Okay, if that thing pulls back without any buy signal. I would think if the NASDAQ and S&P turn around, those are probably one of the areas where you'll see Qualcomm turn around. Maybe sooner. Now, if the NASDAQ and S&P turn around quickly, which they can do, then this thing will probably turn around much sooner. I'd be careful about chasing it at such high levels. You're better off waiting. You're better off waiting for one of those support levels at least. So that's what I think about Qualcomm. I mean, clearly it's a strong stock. Just no need to buy the high. Okay, so thank you for bringing that one up. Photo, AHCO. All right, let's see. What is that? AHCO. Oh, wow, yeah, that's definitely, well, just like we saw with Qualcomm there, this thing's coming off its highs after a vertical. That's like a vertical move right there. Overall trend is bullish, keeps making higher lows, beautiful higher high. Can't touch this thing here. So again, you have to wait for a reasonable support level. Right now, that would be here, around 24, around that 24 and a quarter, 24 and a half. That's the first point to even begin thinking about it. Okay, something around there. See how it performs there. This is probably not going to be as sensitive to the market, I'm going to imagine, since it's one of these health stocks. But I don't know, I'm not familiar with the stock. Now, the next area would probably be the middle of the consolidation, which would be around that 22 area. So those would be the levels I'd be watching for on something like this as points of interest to even begin thinking about doing something. Otherwise, just let this thing go. People chase this thing. You have those Robinhood traders, they chase it, and then they get caught at these levels. And when they're banging it out, who do you think is selling it to you? Them, right? Because they're banging it out from being long at the top. So just wait on that one. And wait to see if you could get a buy signal in a much better area. So thank you for bringing that one up. Interesting. Kevin, I got a couple of XSPA. All right, let's take a look at that. XSX, can I get this right here? XSPA. Oh, wow. Oh, we talked about this. I think you've brought this one up before. Either you or Powell. I remember this stock, Expressa. They do some kind of, yeah, I forget exactly, but yeah, you get someone. I remember this stock. All right, so you got some January. Okay, $5 strike, 65 cents. That's cheap. So you got the $5 strike, which is here, and now so you got a couple of years out for 60 cents. Okay, so see now just an example for Photo Guy, because Photo Guy brought up his situation on Friday with that options trade. Now that is cheap. Okay, so you're risking $65 per contract, and you have about a year, almost 2 years, right, of time on that. Okay, January. So you're looking at a year and a few months of time for $65. If you're wrong and this thing goes basically to zero, you're going to lose $65 per contract. Which, hey, that's not a big deal. If you're right, that thing will double or triple very quickly. All right, with all that time in it. Just like Jumia. So that's a nice potential. Now, at this moment, there's no buy signal in this thing at the moment, but you had a pop a few days earlier. What was it, maybe a week and a half earlier, something like that? You had this pop, which is the initial move, okay, and now it's pulling back, and this could be the higher low. What you want to see, obviously, is a nice bullish close, which you're not getting today, or you didn't get that today, but you get a nice strong green candle, maybe, throughout the rest of this week or something, and you have your little higher low in place. This thing could be, starting a move. And that's where you have all that time, you just let that thing do its job, okay? But the whole idea behind that is that cheap option. 65 cents for that much time is cheap. Yes, it's deep out of the money, which obviously no one believes that this thing can go there. That's why it's so cheap. There's no interest in that option. But then, some news comes out. Next thing you know, this thing is, goes from 2 to 4. That option, even though it will still be out of the money, if it makes that kind of pop in just a few days or maybe 2 weeks, which is very reasonable, and you have all that time, that option will go from 65 cents to like $2 or something crazy like that. That's the whole advantage to long options when you buy time. So I like that, Kevin. Thank you for bringing that up. I may put a bid in for that one if I can get some. See, something like that, if it's 65 cents, that's where I'd go for size, right? I'd go for like 10 contracts or something like that, or at least 5 contracts. That's when you get a nice, it doesn't work out, okay, whatever. If it works out, it's a big trade. So thanks for bringing that one up. Okay, so Ricky, okay, Kodak. Now remember there was some ridiculous news on this one recently, right? And that's why you had that vertical herd mentality move. When this herd mentality move took place, I don't know if you guys remember, maybe some of you weren't here at that time, but I addressed that and I said, I think we talked about it on our show too. I said, stay away from this, right? Stay away from it because that's herd mentality stuff right there. And if you had stayed away from it, right, then you didn't get caught in this when they all give it all back like that. Now, that was on just some nonsense news. So this thing has been consolidating ever since, and it's been trying to produce a higher low, but I'm not a big fan. For one, I didn't like the reason that it ran, the way it ran. I didn't like the reasons for it. That's just basically nonsense, okay? At this point, there's no buy signal, right? There's no reason to go along right now, but you do have a potential support. So let's take a look at that, right about here. So about $8 is a potential support. If you get a green candle, right, a reversal candle off that support, that's not a bad place to buy some if you're interested in it. But this is very speculative. I know they've been around a long time, but I don't know about this company. I was surprised that they still had stock. So, that if you're going to do it, at least wait for something like that. You may even be able to get some cheap options on this one as well. I don't know. But so that's what I'd consider with that. If this thing can take out, the resistance you need to take out would obviously be this one here, which is 10 and a half basically. So that closes above there, the higher low will be established, and I would at least anticipate somewhat of a run to the next point, which would be right around there. So you're looking at maybe the high teens, maybe 16, 17 is like within reason, something like that. So 8 to 16, hey, that's not bad potential, considering you're risking, if you get in around that $8 area and you risk perhaps $1 or $2. So you're risking $1 or $2 to try to make 5 or 6 or maybe more. That's the reward risk makes sense. Just have to wait for a buy signal, and it would be nice if it produced it at that level. Okay, and then if you get in on something like that, it needs to clear that resistance. If it doesn't clear it, it's probably going to gyrate more or just waste your time. Okay, so just something to keep in mind there. Thank you for bringing that one up. Okay, HS, how you doing? Let's see. OMG. All right, let's take a look. OMG, USD. So this one, you see, this one, based on what Bitcoin is doing right now, this one should be doing something, okay? And it's not. So I don't like the lack of behavior. Now you do have a support level, and it's maintaining the support, which is good. These things tend to sometimes move just on news, right? The fact that it's not following Bitcoin is a sign of relative weakness. I don't like that. But like I said, what drove this thing, again, back in August, and made all the, the Robinhood people go crazy for it was just some dumb news. So right now, in terms of reward risk, if you're getting involved in this thing, again, you're off the support. Okay, today's candle is kind of meaningless. You do have a green candle before it. Okay, so if you're getting long something like this at basically 3.25, you're probably going to have to risk about $1. See, 2.25, yeah, something like that. You're going to have to risk about $1 in that thing. And if it has another one of those runs, then the place to consider getting out or start locking in profits would be around 4. So if you're buying it around 3.25, you're trying to sell it around 4 and perhaps higher, the reward risk does make sense. Just keep in mind, these altcoins, a lot of them are just garbage, and they move on some kind of news, and that's what gets everyone excited about them. So having interest while no one is looking, that's a good thing, right? Because you certainly don't want to buy it when it looks like that. So you're buying it when everyone's forgotten about it. Okay, cool, no problem. So that's what you're looking at in terms of reward risk. You just need that catalyst to get this thing going. Like I said, I don't like the fact that Bitcoin is moving and this thing is like not. Okay, relatively speaking, this thing should be pushing as well, which means if Bitcoin sells off again, this thing will probably sell off quicker. I mean, that's what it's telling us right now. So just a couple of things to keep in mind. All right. So thank you for bringing that one up. Not a bad location, and not a horrible situation, but just make sure that you are comfortable with those risks. All right. So Ethereum. Let's take a look at Ethereum. So I'm looking at it against USD, which is the same thing. Here's my Ethereum chart. So now Ethereum is one that tends to be much more sensitive to Bitcoin. And this is what we should be seeing with a Bitcoin attempt going into resistance. Same pattern, higher low, inside bar, took out the high of that inside bar. There's a buy signal off of a support. Those are all bullish signs. Anyone that thinks Ethereum is a short is going against the shorter time frame trend and the bigger picture trend. Not a good thing to be short. So if you're not in Ethereum right now, there's no reason to chase this thing. If you're not in it, you can try using a limit order somewhere in between, like maybe somewhere in that, like around the 360s, perhaps to get filled. Okay. Or you can buy like a small amount, and if it continues to go and takes out this high right there, that peak at 395, perhaps you could put on the next part of your position. So let's say you normally buy, for example, let's say you normally buy 20 coins, let's just say, okay? So you buy 20 now, you buy 10 now, and if it breaks out, you buy 10 more. So you're averaging into position as it goes your way, as opposed to buying all 20 right now. You could do that, or you could buy 10 now and then put 10 below the market and see if they fill you that way, and now you're averaging in at a lower price. So just a few things. And I'm talking about the swing trade perspective. I'm not talking about investing in this thing, because these are not investment levels. You have to take your profits at targets, off of levels like this, because this thing can test much lower levels, and those are the levels where you want to buy into it and hold on, for bigger picture levels like this, which are not very frequent. Okay. So anyway, but I like it long, and it's following Bitcoin. So that's what you want to see. You see the difference between that and something like OMG. So thank you for bringing that one up. Okay, let's see. Let's see here. Okay, so DJ with Nicola. So yeah, so now back to Nicola. I mentioned it earlier. We have the inside bar, right? Basically, which is what we want to see off of a potential higher low. Weak market today, but Nicola is not weak. So my point earlier, DJ, with Nicola is it's not exactly a market stock. So it has a tendency to do its own thing, or basically react to its own news, right? So something like this, like I said, buying call options like the $40 call, I believe you can get for April. I believe you can get for like $2.40 or something like that. Not a bad idea. Okay, that's pretty much where I was going with that. if this thing, now there's no, this is not a buy signal, by the way. This is not a buy signal. It's the potential setup. The buy signal would be if we break the high, 21.76. So if this thing trades 22 tomorrow, then you'll have a buy signal that's in play. Now, again, this thing kind of does its own thing. So it's possible that you could see the double bottom. It's possible that you can see that. That would be an even better spot if you want to buy those long options because they're going to be even cheaper. I bet you could get the 21 April $40 calls for April 21. I bet you can get them for like less than $2 if it pulls a move like that on you. That's pretty good, less than $2 for that much time. Because at some point, this thing will probably at least attempt to bounce. These stocks are, they're in play. What if someone buys out Nikola? What if Tesla, out of nowhere, comes out and says, oh yeah, we're going to buy Nikola because we can. And we're going to, do you know what Nikola will go to like $50 like in 2 seconds. All right. And a chart is not going to tell you that that's coming. That's one thing you have to consider with these plug-in, these cars, these battery powered cars or whatever, these car companies, they can get bought out, right? There would be buyout targets. Now I know Andrew doesn't like this one fundamentally, whatever. I'm just using it as an example. But either way, if there's good news in this space, and this is a high potential growing space, it's not the cannabis space, then, I think buying some out of the money calls with a lot of time is not a bad idea if you can get them cheap. So that's what I have to say about that. So thank you for bringing that one up again. Let me see. Oh, yeah. Okay. So Kevin, when Andrew mentioned it, okay. Right. Yeah, I know. You guys, yeah, there was some good trades in that Kodak. Thanks, Robinhood. Right. They provide the ability for us to get in and out of these trades. You need a lot of reactive traders. That's also something like these public forums like TradingView and all these other places where you have these fake gurus and all these other people calling these trades. They have no idea what they're calling, and you have lots of people following them. That serves the same purpose. That may not sound nice, but that's how markets work. You need a lot of people throwing money around that don't know what they're doing, that are reactive, and that's how you're going to get filled. Otherwise, if everyone knew what they were doing, no one would make money. Okay, so you need people that are all over the place with their trades, and the more emotional, the more reactive, the more herd mentality that drives them, the better for people who are not driven by the herd mentality. All right, and that's what we're all about. So, okay, thanks for bringing that up. Let's see what else we have here. Okay, so Kevin, okay, like right, but sometimes Kevin, when you're in position for those, you get those that's a home run, and sometimes you're going to get those, and yet sure, it's random, and you're not going to be able to reproduce that result consistently, but if you're producing the effective behavior, meaning you took it for the trade for the right reasons, sure, it's a gamble, but if it works out, it turns out to be a big trade. That's what a home run is, right? And we try to get into positions. Some of these options trades that we've talked about, like NYCB, for example. Look at this trade. This is a very low probability that this thing works out. Okay, we talked about some really cheap call options in this thing, and this stock sucks. Okay, but the option's really cheap. Now, if the trade happens to work out, it's random, and if the trade doesn't work out, well, it's a low cost. But that's the whole thing, right? There's nothing on the chart that's really going to help us except the fact that it's fooling around a range low. I bring this one up because the options, I got options for 5 cents on this one with like 6 months of time. 5 cents. So if this thing doesn't work out, 5 cents, come on. I spend that on lunch. So it's okay. But if it's a winner, then, that 5 cents, I can sell that thing for maybe 50 cents. And that's what you're talking about with these things. With this stock, I wouldn't expect to really do better than that. But that's the idea. So you want to be in position for those type of situations, even though they're low probability, high risk, but when they win big. The key to those is not to overload as far as size. So sure, like 5 cent option, can I buy 10,000 contracts? Sure, but why would I do that? It's a low probability that the thing is going to work out. See, people focus on they focus on the reward. And the reward, especially if it's a low probability, it's not what you want to focus on. You have to focus on the risk. So take a look at Workhorse. So Workhorse is another one of these options. This is a good option situation. Workhorse is weak today. Now, we took delivery of this. This was an options trade that Andrew sent out like a little over a week ago, a short put. And it paid a premium, but now we had to take delivery because it closed below our strike price on Friday. And people asked in the chat room, they asked, are you going to take delivery, or is it wise to buy the shares at this area if you don't, if you had missed the options trade? And my answer was yes. You can still buy the shares. Now this thing is lower today by 56 cents, but look at the level. Look at the location. So can this thing test 20? Yeah, it can still do it, especially with this bearish candle today. Well, so there's no buy signal in this thing. But what if we get an inside bar tomorrow? What if we get a bullish pin bar, over the next couple of days? That's going to be the buy signal. So if you're not in it, you wait for something like that. If you're in it, well, you know the risk, okay? So with the people that had to take delivery of the stock, now you're long 100 shares of this thing, but your break-even point is the strike price minus the premium you took in. So you got paid to buy this stock, right? So yeah, sure, the stock's lower, but we're near the low. It's not like you bought this thing at the high, at the range high at 30. You're buying this thing near 20. So again, any positive news that comes out in this space, you better believe that the reaching 25 or something like that won't be very hard for this thing to do. Okay, so just wanted to point that out. Also, I had a question about CGC. Look at this maniac, right? So this cannabis, I keep picking on the cannabis sector because they've been very, very difficult for so long, right? And the question in the chat room, I believe, was from Chevy. The question was, would it be a good idea to sell a call? Well, if you own the stock, then it would be a covered call, right? And yeah, not a bad idea. Now, the thing is, here's the thing. This thing just established today. Look at this close. That's a higher low, okay? In theory, this thing should make the higher high. So should you sell a $20 call? No, you shouldn't. Because it's like right there, and this thing should probably go higher. With this momentum, it should go higher. So if you're going to sell a call on something like this, sell an out-of-the-money call. Now, also, with these type of stocks, the $28 level is like the next key point for this one, if it can clear the low 20s. So maybe if you sell a $25 call, this is where you want to sell front month, okay? This is when you want to sell front month while everyone is reacting to this thing, because chances are that front month option will be worthless. So when you're selling a call, that's what you want to do. Now, if you own the stock, I don't know where you own it from, but if you own it from a lower price and you sell a covered call and they take you out, you then are obligated to sell the stock at that strike price, but you took in a premium. So taking in a premium is like taking your profit early. The advantage to selling a covered call is if it does not close above your strike price, well, now you took in that premium and you still own your shares. So that's a great thing to do, especially with these. So I would choose like an out of the money, like $24 or $25 strike with a few weeks to go on something like this. Perhaps 2 weeks. You could do weeklies on something like this. So is it still 5 cents? What are you talking about? NYCB? NYCB is probably, I have the $12 calls, which are probably zero right now. Maybe 5 cents. Maybe there's like a 5 cent offer and there's no bid. So you could probably get it for 5 cents. But I wouldn't go crazy with NYCB. I wouldn't go crazy because, again, it's not like, that's going to need some news to get that thing going. It may come out of nowhere, but I wouldn't go nuts with that, okay? You're better off with something like, like a Workhorse or a Nikola. They have a much better chance of doing something, even a Groupon. All right, we'll take a look at that here in a minute. But so here's the one that I like, that I'm actually trying to sell a call on this one. Kron, all right, because I have a few hundred shares of this. And it's like, well, you know what? And I don't have them from a great price. So you want to take some away from me? Sure, no problem. I'll sell a call on this. I'm trying to sell the $6 call. but I want at least $1 for it. All right, and today this thing closed at 575. I don't know if mine filled. I don't know if that order filled, but it's a covered call. So should I move that strike higher? No, because this thing is such a piece of garbage that I don't think it'll stay above 6 for long. That's why I put it at such an aggressive price. If you look at calls further out of the money, you're like, oh yeah, I'll sell the $7 call. They're next to nothing. Like getting 25 cents or 30 cents for this type of position is not worth it. It's not worth having the stock called away. So I need a certain, I want at least $1. Otherwise, it's just not, selling a covered call for 25 cents, taking the risk of them calling the shares away for like $25, not worth it. All right, especially if you're taking pain on the stock, and just not worth it. So just a couple of things to keep in mind. If you have like 1,000 shares and you have them from a lower price and you want to make a little extra money, sure, sell it for like 25 shares on 500 shares. You're taking, an extra couple of $100. Why not? If they call them away, you're still taking a profit if you have them from a better price. I don't. So just wanted to mention that. Well, let's take a look at Groupon, because this is like another Nikola situation. Now look at Groupon. Ugly chart, okay? Ugly candle today. No reason to buy this thing right now, but the options are cheap, okay? Especially if you're going 5 or 6 months out. So DJ, my on NYCB, I have the $12 calls, the $12 for I believe for April. So they're like worthless right now. They're like next to nothing. But $12, the chances of reaching $12 are probably very low. The $10 strike is probably a much better choice. Okay, I went a little too far out, but again, I didn't spend much money. So Groupon. Now Groupon is in a good position. Just there's no buy signal. Take a look at Groupon options, because you could probably get these real cheap. What's this thing at? Closed below $20, closed on its low. But look at this. We are in gap territory. You see this? See this gap right here? This basically acts as a support. So you're in gap territory and you're basically right in the middle of it. So you're likely to see a buy signal reverse, out of this, and that would be a nice higher low. If you could pick up an option, perhaps 6 months out, and you can get that option for less than $2 or something, maybe $1.50 or whatever, maybe even $1, I don't know. And you're looking at maybe a $30 strike or maybe even a $40 strike, something like that. Probably the 35s would be good on this, because that's the previous high. You could probably get them very cheap. Again, you need to buy a lot of time on this, because it can waste a lot of time on you. I mean, look, a month and a half, this thing went from basically 34 to just below 20, right? It took a month and a half. So you need at least 6 months or more on something like this. And if it pops, you could see like from August, there was a nice pop and it ran to that 30. It took a few weeks, but it ran. So you have to realize it can take a few weeks. All right, that's why you need so much time in those deep out of the money options. But if this thing runs halfway, if this thing can run to like, let's say you buy the $30 call or $35 call, and this thing runs to like $30 or something, and it runs to it quickly, like meaning in the next couple of months, and you still have 3 months to go, your options will probably be worth a lot more than what you're buying now. So if you buy it for $1 in a situation like that, it may be worth $1.50, maybe almost $2. Did you almost double your money on the risk that you took? Yes. That's what you're looking for with an option. That's why you get all these guys out there bragging about these options trades. I made 500% in 1 hour. Right. It's because they're risking 50 cents. And if they have a big trade, it's very easy to, make double or triple what you're risking. So that's what you have to realize. Okay. You're like, wow, how do they make, 300% in a couple of hours? That's how they do it. So it's about, because they're comparing it to the risk that they're taking. All right, so just something to keep in mind there. But Groupon is another one, on my radar for one of those option moves. All right, so any other questions? I know I ran through a couple of extra things here. Any other questions? How's everyone doing today? All right, I'm pretty much speaking about an hour now, so I can basically prepare to wrap this up. Anyone have any other questions about any stocks that are of interest to you or anything we've gone over. By the way, if you're new to Greenbridge Investing, please make sure you subscribe to the channel. Also, like the video if you like it, and please, if you can, share it with your social network. Tomorrow is Talking Markets with Mark and Andrew at 4 p.m. Eastern Time, where Andrew and Henry come on and they share more of a fundamental perspective on things, and I argue with them about the technical aspect. So check that out. So we try to make that show a lot of fun, and you can ask questions there as well. Also, check out greenbridgeinvesting.com. We have a swing trade signal by text, by email, portfolio management ideas by email, and chat room where we share our insight and trade updates each day. We have a 7-day free trial. Check it out before we raise our prices, okay? Because once we raise, members will not be affected, only people that are not members. All right, so I think I got through the promotional part there. Any other questions? Any other questions, anyone? Great participation, everyone. I really appreciate all the great questions. Mitt K. Oh, that's one I haven't heard in a while. Mitt K. That was one Andrew mentioned a while back. This one used to be really cheap. So let's see. Man, see, I think he was talking about he was talking about this one like when it was like, I don't know, what was it? Much less than $10. This thing's fooling around now, went as high as $14. All right, interesting. So let's look at the support levels first on Mitt K. Right? These are the support levels that you're looking at. Maybe around, is there one here? Man, there's one there. Not a great one. And as far as resistance, you're looking at like something like this, like right around there. Okay? No problem, Ricky. So this is what Mitt K looks like. This is not a place to buy it. I would not buy this thing right here. So the situation that you should wait for if you're interested in buying this thing is perhaps a double bottom off the 12.5 area. That's one possible location. Not the best one though. That's not the best one. A much better one would be here. It's a much higher probability around the 11.5 area, and 10.25 obviously if it wants to pull back that far. But you probably get some buying action in this area here for like a nice broad double bottom, and that would probably be a much better trade idea. But if you get the buy signal off of 12.25 and you're interested in that, again, just you have to manage your risk. Your risk will be defined by this low here, 12.38. So you figure your stop would have to be around 11.75 or something like that, maybe even 11.50, because it really, if it's going to hold that support, it has no business testing 11.50, right? And then off of if you get buying off of that low, then it should test the 13.5 and go higher. I mean, a higher low should lead to higher high. If you have selling activity showing up here and you get a sell signal, then you have to be quick about taking profits, or you should at least have one profit target in this area here. And that would make your reward risk worthwhile for at least target one. And then you could try to put some aggressive targets further out after that to see if it goes for the higher high. Is the broader structure bullish? Yes. So in theory, this thing should go for a higher high at some point. Again, this thing seems to be a little more in line with the stock market based on what this chart looks like. And you're going to need probably some cooperation from the stock market, okay? And what I mean by that is like the S&P. So, you're going to need some more cooperation here. If the stock market starts pushing highs, that thing will probably at least, you'll have buyers in your favor, something. Buying activity is likely to appear. All right, you guys. Yeah, so, but keep that one on your radar, Kevin. Not bad. Keep it on your radar. That's what you do with a lot of these stocks. Some of these stocks, they may have buy signals, but they're not. There are better ones out there. So you keep the stock on your radar. You make note of those levels, and you say, okay, at some point, if this thing revisits this level, then I'll be more interested in it. Otherwise, let me go look for stocks that are giving me higher probability setups or better levels. Okay? So I think I pretty much answered everyone's questions. If I haven't, please ask before I wrap this up. I want to thank you all for your participation. I always like to see the great questions. You can also ask in our chat room. We have a free chat room. At some point, I'm looking to upgrade the chat rooms. We just have a few different things going on, and I can't just do it like right away. It's an expensive upgrade. But I am looking to upgrade our chat rooms because the technology that we use, I'm not exactly happy with. And, I've received feedback that it could be better, right? So I'm always looking out to improve our member experience, and that's just something that I'm considering. So just something to keep in mind. But I'm mentioning that because we do have a chat room. Come to our free chat room, come to our active investor chat room, and you can also ask questions there. All right, everyone. So thank you all again for your participation. I'm going to wrap this up now for real this time. And I hope you enjoy the rest of your day or the rest of your evening, wherever you're located. And I will see you tomorrow. Thank you again for watching.